Financial Argument. Follow us on YouTube.
Greetings and thank you for joining us at FutureMoneyTrends.com. I am here with a special guest today. I got to meet this gentleman a few years ago in Las Vegas. Without a doubt, one of the most passionate people you will ever meet when it comes to his research and his findings, and as he delivers that on YouTube videos as well as his website, traderschoice.net. No one will run into this guy and not feel like he's all in with what he is revealing in his research. Greg Mannarino. Greg, thank you so much for joining us.
It's great to be here. Thanks for having me back. I appreciate it.
Greg, I want to start off with the economy. With the election going on, there's been a lot said about the recovery and interest rates and manipulation. We know the manipulation's all around us. But for the U.S. dollar specifically, I know you keep close track of it. What is going on with the U.S. dollar?
Well, in the short term, what we've seen over the past several weeks is a dollar that has gotten markedly stronger. I think that is going to reverse. I'm not saying it's going to be an all-time top for the dollar, but I think as from a trading perspective, as a matter of fact, I went short the dollar this morning. I bought puts on ticker UUP, which is the dollar bullish ETF. I think there's cash to be made here. But, that's just a part of the big picture here. And you had mentioned the interest rates. And I think this is something that we need to keep a very close eye on. I've been talking about this for years. Forget the stock market. That's where everyone looks. You need to be looking at the debt market, which is the bond market. There's a confusion there. A lot of people write to me, hey, Greg, what's the difference? It's the same thing. The bond market is the debt market. That's going to tell us where the direction of the stock market is going to go. So the bond yields are kind of, normalizing lately. So what does that tell me? I really feel at this point here that there's a strong possibility we're going to see this market rise in the short term. They are determined to keep this propped up. They have done everything they can, and these companies themselves, by spinning off assets and buying back shares of their own stock here. I have no proof of what I'm about to say, but I know that the Federal Reserve is using dark pools to actually buy this market. Janet Yellen, before Congress just a few weeks ago, said if the Federal Reserve was allowed to buy stocks, that they would go ahead and do that, and that would be beneficial. That's incredible. What companies would they choose to support? They have done everything that they can to attempt to keep this market propped up, and there's a reason for that. And I'm more than certain that your listeners are aware of this. It comes down to the fact that the Federal Reserve is a serial bubble blower. They blow bubbles, and then they let these bubbles burst. And they do this cycle after cycle. We just happen to be in a risk-on cycle now, meaning they're trying to get as many people as they can into the stock market because they are going to reverse this at one particular time. And we're going to see this all achieve a fair value. Right now, nothing is priced fairly. I don't care what asset you want to look at, houses, currencies, debt, the whole entire market is being rigged. It's being rigged by runaway central banks who have twisted the system upside down, backwards and sideways, gone negative in parts of the world. Here we have a Federal Reserve that is continuing to suppress interest rates and will continue to do so for the foreseeable future. I don't care what happens in December. They're going to raise rates 0.25% or 1%. It's not going to make any difference whatsoever.
Sure. And Greg, with that said, though, how will the market reach fair value? I mean, does the Keynesian arsenal run out? I mean, look, the fact of the matter is if the Fed's already talking about it in Congress, that they thought it would be a good idea, that's probably going to be part of the next big QE, infinity, right?
Well, like I said, I think it's already going on. I think that the Federal Reserve is using these dark pools to buy the market, to keep it propped up here. That is their goal. That is their only goal here. They need to keep the public distracted into thinking that if the market is high, that our economy is doing well. Meanwhile, all you need to look at is the labor force participation rate near historic lows here. The money velocity, which is the rate at which cash is moving through our economy, is near historic lows. The real unemployment numbers are at least 2 to 3 times higher than what they're telling us here. Our GDP numbers, despite that they keep telling us, oh yeah, we're going to see 2.5%, 3%. More than that, we're getting 1.5%. So there's no economic recovery here. But what we are seeing is inflation, and the Federal Reserve is admitting that now. The Federal Reserve is talking about their next scheme. The next scheme is they're going to go allow the economy to quote unquote run hot. What does run hot mean? They want inflation to creep in here while continuing to keep interest rates low. That is going to continue to rob people blind because they won't even be earning interest to keep up with the rate of inflation here. They think by forcing people to pay more for things that it's going to, spark some kind of economic growth here. And the Federal Reserve said, as a matter of fact, Janet Yellen herself said specifically that if they don't do this, that we may have a quote unquote, her words, permanent scar on the economy. So you can see they're not done, like you said, by a long shot. They are going to do things that we can't even believe yet to keep this all propped up. But again, there is going to be a moment of reckoning. It always is the same thing. The market itself right now has not been this expensive. As a matter of fact, let me put another perspective. It's been this expensive only 8 times in the last 200 years. And every single time it's gotten this expensive, the market has pulled back. Now, they're not going to allow that to happen yet. They're going to continue to inflate this on the back of the debt bubble. And there's going to be a terrible price to pay for this across the board when it all corrects to fair value. It will. There's no doubt at all, and we're going to see the action in the bond market first. This is why people need to stop looking at the stock market and start looking at the bond market. The bond market is going to tell you where the market is going to go in every other asset. And why is that? Because the bond market or the debt market is the largest market of them all by exponents. And every other asset derives value from what's occurring in the bond market.
Yeah, and they're already doing guaranteed defaults, right, with negative interest rates. Greg, do you think the election is going to set the path forward for many of the central planners as far as with Clinton, we may have more war, more distractions with Trump. Who knows? Maybe they'll let the whole damn thing reset on him because they'll be able to lay all the blame on his presidency.
Maybe. But I think this is what I've been saying for a while now, and it's pretty clear to me. Wall Street wants Hillary Clinton. They want to keep this party going right now, and they have been made assured by her in secret conversations that we've all been hearing about that's exactly what will happen. This is why the establishment is so fearful of Donald Trump right now. So, I don't care. Here's the main thing. No matter who gets in there, we're going to have a moment where this corrects. Let's just put another perspective on this. It took 225 odd years to build up the first half of our national debt. President Obama has had to double that in his 8 years. In order to sustain just where we are now, we will have to double it again. That means a $40 trillion debt in a shorter period of time. It's not sustainable. The debt market is the equivalent of a nuclear explosion. It is going to go nuclear. And I'm not the only one saying this. There's a lot of pretty lofty people that are starting to say, hey, the bond market, there's a problem. The debt market, there's a problem. I might have been saying this, I don't know, maybe before most of them, but it's so obvious to understand that the environment we are in is not sustainable despite the fact that world central banks have no alternative but to continue to inflate. If they do not inflate, the whole system will implode. It's going to implode. And they're already starting to float out alternatives to this. They're talking about this universal basic income. Look, we already know where we're at here. The inner cities are falling apart. Black unemployment is off the charts. Social unrest is starting to pick up all over the place. So they're creating a need. They're creating a need for a new system, again, at the lower rung of society, while inflating the market on the back of a debt bubble, making everyone think, hey, the place to be is the stock market. And that probably is true up until now. But this is going to reverse. And the average person who doesn't know any better, and they're very misguided financial planners are going to force them to stay in this market while it corrects hardcore. They are going to be wiped out, and the government is going to step in and say, hold on a minute. We have a solution for you. And the solution is going to be some type of extreme socialism, in my opinion. The middle class is already, I would believe your listeners understand this, is under attack. It is being attacked, systematically wiped out, and will not exist in a few years. And that's the way I see it.
I totally see it the same way. It's a very sad state we're in, the destruction of the middle class, the restructuring of the United States, third worldization of the United States. Greg, many of my listeners, as well as yours, are purchasing physical gold, physical silver, and mining shares, especially in the last year. If you could, let's briefly talk about this Deutsche Bank news that just came out. They're going to have to pay a fine, a very small fine relative to how much money and how many people they've ripped off. Let's talk about Deutsche Bank. What happened, and what does this tell you when you see stuff like that? Because do you think it's only Deutsche Bank?
Exactly. It made me so angry. Absolutely, yes. Deutsche Bank is going to be fined a whopping $38 million for rigging the silver market. Now, look, we've been hearing about rigging in the metals markets for years. It's not going to stop here. And it's not just Deutsche Bank, quite obviously. It's all of these banks that are rigging the gold market, that are rigging the silver market. But I think what we need to look at is what's underneath it all. Why are they doing this? It all goes back to the central banks, more specifically the Federal Reserve. The Federal Reserve does not want anyone in a hard asset. They want you in their paper so they can control you. Period. So when you hear, or any of your listeners here, when we hear that these banks are continuing to deliberately manipulate and rig the price of these assets, that means we need to buy more. But interestingly enough, they get paid this fine. But what investor that has gotten, let's say, hurt here is going to be made whole? Nobody. So you can see it's a very dark thing that is going on here. But look, I've been saying since I sat down here and started talking about this years ago, we need to be betting against this debt. We need to become our own central bank. And those simply mean hoarding hard assets. And when we hear more of this, we need to hoard more of it. It's not going to go on forever. No asset right now, and I don't care what you want to look at, has a real price discovery mechanism behind it anymore. But it will. The market will win out in the long run. There's going to be a moment here where this corrects to fair value, and the Federal Reserve is going to be powerless to stop it next time. What are they going to do? Devalue the currency further, buy more assets? They're trying to buy it all anyway. But again, they're trying to. The mainstream media is already floating out alternatives to what may be coming here, and this universal basic income is one of them. And I think we need to be very leery of that. The government, especially if Hillary wins, is going to be looking to control every single aspect of your life. If they can control your health care, then they can control your income. They can dictate every single thing, everything that you do, that you're allowed to do, that you can think, how you raise your children, how your children are taught in school. So we're at a pivotal moment here in the United States. And unfortunately, the way everything is being rigged, not just silver and gold and the markets and the debt market, it's deep in politics right now, and we're seeing our country come apart big time.
On a final note, for gold and silver and the mining shares, just what's your analysis of those going forward for the rest of the year?
Well, in a real market, we would. First of all, the price in dollars of gold and silver, you can't even put a number on it. If you base it against the debt, it would be multiples on what it is now. What are they going to do moving forward? I have no idea. In a real market, they would be much higher. All of this would be much higher. And we may be getting to that point. We may be getting close when it will. But again, these world central banks and the Wall Street institutions have proven to be very resourceful in manipulating all this. All we need to know is that it will correct to fair value. And these are not trades. If you're holding gold, if you're holding silver, these are investments that you're holding for the longer term. I don't even trade the paper derivatives because it's not real. You can't do it. You can look at it. You can see where it looks like it should go according to the fundamentals underneath it, what we're being allowed to see, and the technicals, but it doesn't go that way. It goes whatever way they want it to, and the proof is right there. Let's look at Deutsche Bank today.
Oh yeah, you probably make a fortune just going long on the Asian markets and shorting the U.S. side, especially the open. So, all right, Greg Manarino, traderschoice.net, everybody. Check them out at traderschoice.net. Greg, thank you so much for your time. I really appreciate it.
Been great. Thanks a lot.